Hi everyone, Dale Pinkert here, TradeGATEHub. We are powered and sponsored by TradeView Markets. I prepped you for the CPI, and then post CPI, I was back with you on Wednesday. Last week I said I didn't think that that cable would get over 22.5. It didn't. It's still holding this moving average here. I still believe there's a chance that it takes it out and we trade under this prior low into the 117 range. I also said that Euro was the preferred short and Euro failed from 108. Still think we could see these lows around this 105, 104.5 level coming up. And then the short that I gave on Wednesday after Powell's speech was up here in the Aussie at 70.11. So it was good for over 200. I still think we'll crack this moving average here and trade down to between 67 and 66. Japanese yen really fit in with my talk of higher yields, my belief that yields were heading higher, that the market had not priced in what was happening in the economy, and that was well before this breakout that was down here with the double bottom. Then we had the little head and shoulders breakout. Let me just show you that too. So that's here. So we had this black line that it was tested. Then we had the downtrend line that was tested, and we are pressing towards maybe 4%. We have a confirmed high here on the 10-year, so there should be a new high. And when I look at this rally and what we had in the 10-year, and I compare it to the rally that we've had in the yen, it's been pretty similar. So we will have some divergence up here. And I do think that these are were my first targets, 380, 390 on the 10-year. So we'll see what happens at new highs in US dollar yen. Most likely it peaks when Euro's trading 105, 104.50 and cables down at that target, taking out that 118 low and the Aussie failing one more time to take the market down to the 67 level. Dixie, so far, kind of a weak bounce, and this 104 level is pretty important that we got above, but could not close above it. Stronger pattern in yen, as you can tell, right? So the yen's going to have to carry the dollar to new highs. I think it will make another run at new highs. I wouldn't want to see it back under 102. In fact, I really wouldn't want to see a pullback beneath 103 in the Dixie for a continuation move to the upside. So this is something else that I forecasted and got this right, the sell-off in the gold. When we were 1960, 1820 seemed like a long way away, and we did put in a little bit of a reversal here. So gold most likely is going to respond to one more wave up in the dollar. We'll see what happens here. Maybe we retest this 1810 level. Silver acting a little better, and silver did get down. I was talking about the $21 level for a long time. It got down to 21.16 before we had a reversal, and now the gold silver ratio is rolling over. So if we're going to start heading south on the gold silver ratio, that's going to be bullish, more bullish silver than gold. So silver should begin to outperform gold as we start to head down on this gold silver ratio. Just take a look at a weekly. This could have been enough. We had this very large move from 95, and this wasn't the high, but we retrace, call it 75, 95, 50% here. I'm not saying there can't be another push, but this was enough to shake out silver bulls, because as this was going on, gold was holding and silver was selling off and not performing, not making new highs. And I want to cover what's happening here in the S&Ps, because I talked about a potential rollover here, and I've been accumulating the 25 June VIX calls. And I want to show you something here today, and we'll see if it turns into something. And, you know, if you trade mainly FX, you don't have a lot of experience with gaps. And we've had a lot of gaps here in the VIX. You know, we had a gap here that was filled, and we had a gap here that was filled, and we had a gap here that was filled. And now we have this gap after a holiday. And this could end up being a breakaway gap. And what will confirm this as a breakaway gap, unlike the other area gaps that just got filled, that's why I call them area gaps, this at new highs for the last 30 days could be a breakaway gap and on its way to higher levels. The next big test for resistance is going to come in up around this 2480, 25 level, around the 200-day moving average. And say we do a little work here and move sideways, breaking out over 2480, you just take the low, which was 17, right? And this is when I first started talking about it. I called this as the bottom. It looked a little doubtful here, but late last week, this is what happened. And through 24, just round numbers, could give you, you know, low 30s, 31, 32, back up towards, you know, major resistance at 35. So if this is right, and we're going to have some risk off, that should feed into the dollar having, you know, a little bit of safe haven qualities into it for one more drop. So we'll see what happens there. That's really my take, is that the dollar still can have another push to the upside as long as we hold this 103 level. I think it'll be led to the downside by the weakness, which is Aussie. And Aussie has targets at 67-ish, maybe 66 on an extreme. And then I think we're going to get a pretty good rally. Gold, I nibbled on a little bit in the miners last week, and a silver miner. Nibbled. So something that I tweeted about that I think everyone should write down. Just as it is very important to be patient and let trades come to you and come to the levels that you have an interest in being a buyer or a seller, you also have to be patient about the size that you enter on your initial entry. So being patient about that is not going all in on a trade that you were patient for and waited for, but just to put your toe in the water, maybe a third, and see how the market behaves. You can always add more as the position develops. So patience, waiting for the trade, patience going into the trade by not going all in. So thank you. Hope we're adding value here at TradeGATEHub, TradeView Markets for you guys. And have a great day trading, good hunting. And let's see if the VIX turns out to be a breakaway gap. That would have implications for, I would think, at least 3,900 or so on the S&Ps, where the market's going to have to make a stand. Otherwise, we're into a washout type of scenario. So good hunting the rest of the day, and I'll see everyone tomorrow. Mike, I'm going to be with Mike in actually an hour and a half, and we'll see what Mike has seen in individual issues, what he's trading, what is acting heavy. So if you're a stock trader, invite you to join us for the Mike and Dale show at 11 a.m. EST.